Okay, is this thing working? I ain't got to push my. Is it on? Yeah. I did see Clint come in, didn't I? Okay. Welcome to the House Committee Budget and Fiscal Oversight. We got a bill we're going to have a hearing on today, and I'm going to go to the Lord in prayer, and then we'll make one simple little introduction here, and we'll get started. Heavenly Father, we thank you for this time. We ask that you be with us, and we look to you for guidance and the decisions we make for the people of the state of Georgia. For in Christ's name I pray. Amen. We've got a new member with us today. Gabriel, Representative Sanchez, if you will tell us what area you represent and let us know who you are. What number are you? Number 7.
Yeah, 7. Thank you so much, Chairman. I appreciate you. Hi, I'm Representative Gabriel Sanchez. This is my first term, and I represent House District 42, which is Cobb County, Smyrna, Cumberland, and Dobbins Air Force Base. So I'm excited to be here. Thank you for having me.
Okay, we're going to get started when you're ready. You and anybody you would like to speak to, you, Bill, you tell us, and then we'll have I think we've got a sign-up sheet, which we'll open up with you, and you'll go to the podium. And I hope the microphone works. It's been known not to.
Well, we'll see. Got me a tie from putting in my pocket here. Yep, I think we're working. Y'all hear me okay? All right. Thank you, Mr. Chairman, members of the committee. I bring to you House Bill 159, LC 339765. As you can see, there's really only one change. It's a very, very small change on paper, and that is on lines 13 and 14, where on line 13 it crosses out $3 billion, and on line 14 it adds $12 billion. And while it's a very small change on paper, it is a substantively big change. So the Department of Community Affairs, through the GHFA, issues bonds in order to promote and put forward several different home loan programs, Georgia Dream and some other programs. As a realtor, we've used these programs throughout my career to provide home loans for firefighters, EMTs, prison guards, teachers. They're really fantastic loans that enable a lot of our community, first responders, teachers, and that sort of thing to being able to afford to buy a home. The problem is that they fund these with money that come from the issuance of bonds, and they are capped in the amount of those bonds they can issue at $3 billion currently in aggregate. We are about a year and a half or so, I believe 2027, are anticipated to reach that cap, and there will be no more money to be able to fund any more of those loans. So what they're seeking to do is to raise that cap to $12 billion, which when I first heard it, that is an exorbitant number, and it does cause some consternation when you first hear it. However, the way these bonds are repaid is they issue the loans. The mortgage interest that is paid on those loans covers the amount with the bond, and we've got some paperwork here that kind of illustrate this a little bit, and I'm going to let them talk a lot more about this. They can speak to it more proficiently than I can. But essentially, the mortgage payments, the interest that's earned on that pays back these bonds, and the vast majority, an overwhelming majority of these loans are secured by federal government insurance, either FHA, VA, or USDA. So approximately 99% of them are federally insured. So if for some reason the buyer does default, then the mortgage holder, which would be in this case us, is made whole by FHA, VA, or USDA. And so I'm happy to answer any questions, Mr. Chairman, but those questions I'll do my best, but they may be better served to be answered by DCA.
Well, let's let the gentleman here speak, and then you can stay up with him, and they can ask questions of either one.
Yep, like. Perfect. Thank you, sir.
Thank you, Mr. Chairman. Wesley Brooks, Deputy Commissioner for Homeownership at the Georgia Department of Community Affairs, which also is the Georgia Housing Finance Agency. We issue private activity bonds out on the in the marketplace. This happens usually a couple times a year. Usually, this is capped by an issuance authority that gets done by JISFIC in the governor's office once a year. So there are additional governors on how much we can issue. We use these bonds to buy loans that qualify first-time home buyers, usually under a certain income level, from a local network of lenders throughout the state, and then we service those loans in-house at DCA. So the payments that they make every month go to pay back our investors. It's self-sustaining. We pay for our staff. We pay for our expenses with the proceeds from these funds. They are also capped, as they are, most of them are a federal limitation through the Treasury Department. But it allows us to really contribute to first-time home buyers in the state. And since its inception, we've done about 53,000 first-time home buyers throughout the state. I'm here to answer any questions you may have.
Thank you so much for bringing this bill. This is a good bill. I'm going to vote yes on it. Just take that suspense out of it. I have some actual questions. The first question is to raise the bond amount from $3 billion to $12 billion. Is this going to affect the bond rating at all to quadruple it?
So that's a great question, and actually it's very supportive of us to have a larger outstanding bond limit. We get rated every time we do an issuance by S&P. We're currently a AAA rated bond. We actually just got a notification today, again rated AAA, and that's really a tribute to how fiscally responsible GHFA has been. One of the benefits of servicing those loans in-house, it means that if for some reason a borrower does get into some sort of trouble, we're able to work with them, we're able to keep them in their homes. It's why we have a lower delinquency rate and a lower foreclosure rate than similar FHA-backed loans.
Great, thank you. The second question, as a follow-up, is this current code stipulates that this is for single-family residential housing?
That's correct.
Is there a different mechanism for multifamily housing, or?
We at DCA, GHFA, we have we also manage the low-income housing tax credit, home funds through the federal government, but this one in particular is only funded with this particular bond type. We don't get federal dollars or state dollars to contribute to that right now.
So no federal dollars for multifamily?
We do, but not
okay.
not under the same
Gotcha, okay.
bond limit.
Thank you, great bill.
Yes, sir. How long has this amount of $3 billion been in place? How long has that been here?
We were increased to $3 billion in 2017. We anticipated, I think we came in and asked for a little bit higher amount, but it gives us about 10 years, and it's kind of the same timeline we looked at when looking for an increase this time. Just because it's kind of a 10-year window before we think we'll hit that $12 billion mark, doesn't mean it'll be the first time we come back and check in and talk about how the bond series is doing, how our portfolio is managing, but it's been in place since 2017, and I'm sure you're aware that housing prices have generally doubled since then. There are a lot more folks in the state of Georgia that are looking for a place to live, and so we think that this is a good number to meet the need of the state.
Is this the first time that this bill's been brought since 2017?
It is.
Okay. That's all I have.
Thank you, Mr. Chairman. A couple of questions. Can you describe your portfolio a little better?
Sure.
And what kind of assets, asset cap, current pool that y'all might have under this current bill?
Sure. So I think one of the things you heard earlier was about 98% of our loans are government-backed. And so what that means is 91% are FHA, another about 3% are VA, and then a mix of conventional and USDA in there. Our standard buyer, I'm going to pull up these numbers here, so forgive me for just a second. Our usual buyer is a household of two. Their average income, their average purchase price is right now about $256,000 for the house. Just 4 years ago, that was $187,000. So you can see the kind of increase in the demand for the higher purchase prices. Usually, these folks are credit scores of around 712 to 718, so a solid credit score. They are bringing some money to the table, but the agency does provide some down payment assistance when needed. About 4% of our loans this past year were VA loans. That's as a result of a new product we launched called Peach Select that offers a below 5% interest rate for a VA loan, which I'm sure you're aware that's not something you can find out there, but it does support our veteran community pretty well. The loans are scattered throughout the state. The top counties are obviously DeKalb, Clayton, Fulton, Muskogee, and Houston, Bibb. So we are pretty well established around the state, and that really depends on our local lenders network. Usually this is for households that are below 100% of AMI, of 100% of area median income, but we did launch a Peach Select program that allows us to go up to 150%. So these are folks, Peach Plus, which is, it allows for a slightly higher interest rate. We can still get folks in that make a little bit more money.
Repeat that, 100% of what?
Of the area median income. And that's set forth by Treasury.
And how many mortgages or how much assets do you currently have issued out of the $3 billion?
Sure. We have about 14,000 mortgages that we're currently servicing. And that portfolio lines up generally with about $1.8 billion in outstanding assets.
And do y'all have like a yearly cap to where y'all increase every year, or what's the average increase?
So last year, the governor's office approved us at, I think it was $350 million to issue that year. This year was a $500 million issuance. Some of this is around the increased growth of our programming because of programs like Peach Plus and Peach Select that are reaching a broader market. Some of it is an increase in purchase prices for home buyers.
Thank you, Chairman.
Representative Campbell.
Thank you, Mr. Chairman. And I agree, a great bill, and I think you've answered most of my question. I was just curious to know, with the increased cap, would the shift of financing, how would that change? Would it be higher volume of those areas you just described, or new programs that might be offered?
So we're always looking at new programs to increase how we're reaching folks throughout the state. There are some counties that we haven't really made headroads in, and we'd love to get more production in some of the places that have a little bit less density. But I think that what it allows us to do is to continue the work that we've been doing throughout the next 10 years. I don't see us growing in number as much. We do project some growth in the number of households we serve, but we do expect that housing prices will continue to rise. And so the loans will get bigger. And we'll continue to underwrite with that same kind of structured, conservative viewpoint that we've had that's kept us at a AAA rating. But I think that we will see that the number will continue to grow even if the number of people we serve does not.
Thank you, Mr. Chairman. So Deputy Commissioner Brooks, so I'm up here reading, I was trying to read really, really fast while you were talking. Is this program at risk on what's happening at the Department of Treasury? Because I'm reading here and it says that a lot of programs at the state level that are jeopardy or or possible obstacles based on funding freezes at the Department of Treasury and VA loans. As I'm a retired naval officer, so I know a lot about VA loans, but it lists a lot of programs, and this falls in that web. What are your thoughts on that?
So it's twofold. So the first is, this is one of those great opportunities where Treasury essentially gives us permission to do something, and that's sell tax-exempt bonds, but they don't give us any money for it. The private market does that. The folks that are buying these bonds are the people who are funding pensions or 401ks because they're really solid investments over time. So the private market will continue to fund this, and in that sense, what happens in Washington doesn't necessarily directly affect it. There are places where cuts in federal funding does kind of tangentially affect us, and one of those is VA or FHA insurance. If someone did have a claim on, somebody foreclosed, or we had to foreclose on a house, and there was a freeze, then maybe that particular loan that had FHA insurance would not be able to pay that out. Fortunately, we foreclosed on 12 loans last year. Right, this is not a place where we feel like it's going to affect our portfolio. I will say that the other places we do housing counseling for our new buyers, lets them know what kind of product they're getting, how to be a responsible home buyer. Those programs are federally funded, and so some of the education piece will be affected. But this recent pause didn't affect us at all. We kept moving as we had planned, and we're optimistic that really this kind of public-private partnership that makes this work will continue even if there's a disruption in federal funding.
If I may follow up, Mr. Chairman, so is that something that we can do at the state level? Is that a resource that we can possibly say this was typically done at the federal level in terms of education, build awareness, marketing, something that we would tend to ask for the federal level to leverage? Is that something that we can do here based on what you just said?
Well, I think that home buyer education is something that's great for any community. Yeah. I've done it myself. I've paid for it out of pocket for myself when I bought my first home. Yeah. I encourage any type of opportunity to make sure that folks are an educated buying populace is something we should take advantage of.
The only reason why I asked that because of the Great Recession, a large part of that Great Recession was because of the mortgage industry that collapsed, right? And there was a lot of things that were happening because folks just did not know what they didn't know what they were signing.
Yeah.
Like balloon payments, all those sort of things.
Yeah. And that's where home buyer education is really helpful. Absolutely.
Okay. I like the bill though.
One other question. You mentioned how many loans you had out now at this point. How many of those loans are in default at this point?
Default?
And the percentage that you have yearly that go in default?
Absolutely. Our foreclosure rate last year was 0.6%, 0.06%. And if you compare that to the national FHA foreclosure rate, theirs is 0.57%. So we're doing great in terms of the number that are in foreclosure. And we are significantly under what the MRB FHA delinquency rate is as well. So our portfolio is strong.
Thank you for your answer.
I wasn't going to ask any other questions from anybody on the committee? I wasn't going. You said a couple of things I want to clarify before we move on.
Yes, sir.
You said, I guess, lending institutions purchase these bonds. You said, we'd go to lending institutions, but you said something about then they would come to us. Who's us?
So DCA, GHFA buys these mortgages from lenders in the state. So, places like Acopia or American Pacific Mortgage Corporation, they know what our requirements are. They go, you find the lender or the buyer finds them, and then we will buy that loan from them.
But they come to us for the money, or what do you mean they come to us?
They come to DCA to buy that loan from them. Okay. And then we will service that loan. The household will make payments to DCA.
But is it pretty normal are there a lot of people that make 100% of the median income and have a credit score from 712 to 760?
Absolutely, yeah. In comparison, I think we could do a lot more than we're doing. In comparison to other states, even throughout the South, we're a little bit behind them in terms of production, but there are alternative reasons for why that is.
What total income would be the problem to keep people from going for a conventional loan on this, or what's the?
Sometimes that's the case. Sometimes, if you are getting a conventional loan, this is when you hear, I need to have 20% of the purchase price, and being able to save up that much cash for purchase is difficult for some folks. So if you're income qualified, if you've got a good credit score, a good debt to income ratio, the FHA will say, okay, you don't have to have 20% down payment. You can have a 3% down payment, and that's enough for us to insure the loan. And that's why you'll see a lot more folks come the FHA route.
Okay.
Thank you, Mr. Chairman. Quick question. What percentage of the market are y'all?
It's pretty small. I think we looked at we get HMDA data, HMDA data every year that we look at. We did an analysis of 2023. We were less than 5% of the market. We could be, I think, a bit more, but some of our priority has just been around making sure that, one, we're not competing with the market. Right, that's not our goal. Our goal is to make sure that we're taking care of a subset of Georgians who are ready to purchase, who the market's not currently serving, and these are folks who are qualified, who are responsible lending opportunities for us.
Any other questions from the committee? We got some other people that want to speak to the bill. Is that all with your group of presenting the bill? They won't speak, I'm sure.
I may just clarify one thing really quickly, if you will. So, thank you, Wesley. Christopher Nunn, I'm the commissioner at DCA, and I think it's really important that we clarify that GHFA, which was merged into DCA in 1996, is the issuer. This is not, we're not pledging the full faith and credit of the state against this bond portfolio. This is the Georgia Housing Finance Authority. These are secured assets. I thought it was a fantastic presentation. Thank you very much for carrying the bill. But that was, I just wanted to make sure I highlighted that. And then on the oversight, it's actually twofold. So every year, in terms of the issuance authority for GHFA, not only does the GHFA board authorize an amount to be issued in a given year, but so too does the Georgia State Financing and Investment Commission. So it's a two-pronged oversight of the total issuance authority, and then of course the GHFA board is involved with every single issuance from a bond standpoint. So I just wanted to make those two clarifying points. Thank you.
Hear from a couple other people want to speak, and then I probably got another question or two for all of you. Austin Hackney, tell us who you are and who you're with, the Home Builders Association.
Mr. Chairman and members of the committee, thank you for the opportunity. My name is Austin Hackney, here on behalf of the Home Builders Association of Georgia, and hopefully their home buyer customers using this investment from the state to provide those mortgages to give them the opportunity to accomplish the American dream. So the Home Builders Association fully endorses this bill with our support, and we hope you will too. Thank you.
Thank you, sir. Any question for Mr. Hackney? Okay, Betsy Bradford. It is Betsy Bradford.
I'm short. Good afternoon, everyone. Betsy Bradfield with the Georgia Association of Realtors. We also fully support this bill as a Category 1 for us, which is our highest level of support. Obviously, you all know that we are in an absolute housing crisis. People cannot find anywhere to live, and so we need to activate absolutely every lever that we have, and these loan products are quite vital to the state of Georgia, and it's one of our core pieces to encourage first-time homeowners to be able to buy their home in the state of Georgia. I am also someone who has used the Georgia Dream product to purchase my condo, so I can speak to the program fully and its success. So we hope that you will support this bill, but I'll stand for any questions.
Committee have any questions? Thank you. I've got one more, I guess, for DCA or the presenter. You said there were 14,000 homes now under this program?
That's correct.
The 12 billion with a B. In 2017, you asked for 5 billion, and I believe the Senate maybe cut it to 3 billion. What is the limit on? I mean, we do this, and of course, this is an oxymoron, I guess, if I can say that. How long did it take you to build $12 billion worth of houses?
That's a great question. So I think the way to really look at it is what's the need in the state, and we just did another needs assessment about how much housing and new production was needed. Really, we look at 12 billion as a place where these bonds kind of stack on top of each other. When we go do a bond deal, some of them may mature in 5 years and some will mature in 30 years. And so every time we do a deal, there's kind of this layering on top of them. If a home buyer sells their home, we can pay off that loan right then and there, or pay off that portion of that bond right then and there. But usually that doesn't happen because of the mechanics of the financial industry. If for some reason we take that money and we can invest it and we don't have to pay that bond back, we can do that. We can do it on certain call schedules, and we have financial advisors who help us plan that out. So I don't think of the $12 billion as like, you give us $12 billion right now, we're going to fix the housing problem, although that may be the case. But that's not what we're looking for. I think what we're saying is over the next 10 years, we will probably stack $12 billion worth of assets, and 10 years gets us out there. When you ask about where the limit is, one of the things is that when we look at states around us and how much kind of production they're doing, we look at North Carolina, who just got theirs raised to $12 billion. We look at states like Florida and Alabama, who don't have a limit. Tennessee is going through the same processes that we're doing right now. And so 12 billion really is kind of the responsible number for us to look out and say, we can't predict what the housing market's going to do, but we can follow the trends and know that that's going to buy us about 10 years before we come back and say.
Did I understand you to say the governor okayed annually how much you could, what did you say about that?
The issuance authority, I'm sorry?
GISTIC and the Georgia Housing Finance Authority.
Right.
Say it again.
Good. So our board, GHFA's board, approves our issuance authority every year. So they'll say during this calendar year, you can issue X number of, this year in 2025, it's a $500 million is our issuance authority. That's the number of bonds that we can issue. And then we go to GISFIC, and they approve that number as well, or disapprove that number as well.
That kind of gets back to my point. If it stayed at 500 billion, it'd be, is that like 24 years before we'd use all this money, or?
So yeah, I could see where that you're thinking if we're doing 500 million every year, yeah, it could take 24 years. But when we see the growth in housing prices and the demand, I think what we run into is it's 500 million this year, but that's probably not where we're going to be in subsequent years, and we're going to need to have the room to compound that.
One more question, Mr. Horner.
Sorry, Mr. Chairman. One last question, something that you were talking about. Did you say there's an investment portfolio tied to these accounts?
So all of this is these private activity bonds. That's a great question. So these private activity bonds, if they look between 5 years and 30 years out. If someone sells their home in 3 years, we're not immediately responsible for handing those monies over to that particular bond. It has to be done by a particular call date on that bond, not that bond series, but not necessarily that exact same day. So it allows us at DCA to say, I can pay back a bond right now, but if there is an interest rate that is higher in the like right now, interest rates the market's been doing great and interest rates are great. So we're able to kind of put that away so that we can fund things like down payment assistance later on for another household. Yeah, largely money market funds, yeah.
Okay, have we got anybody else that'd like to speak in any way to this bill? Any other questions from the committee? Okay, we're having a hearing only. This is a it's a lot of money, and it's a good program. So there's it's a catch-22 as far as we will quickly give you an answer when we're going to get back with you and get together and see if we're going to have a vote. And
Thank you, Mr.
I see the
Chairman.
very, very positive parts of this.
And if I could add just one more thing, I know that we've had some conversations about this, and we are pretty conservative-minded policy-wise here in the state, and I tend to prefer that. And this is not antithetical to that to me. this is not the taxpayers of Georgia's tax money that we're using here. This is bonded, and it is very conservative. These bonds are highly sought after because they are municipal bonds, which means you get tax-free returns and stuff like that. So, you talked about 2008, Representative Jackson. I was a realtor then as well and lived through that. And you heard a lot about collateralized debt obligations that went under, which were where all lenders bond off these loans that they do. Those were highly risky. These are very, very, very conservative loans, and they are very well thought out. We've done a number of them, and it's a really good program. So I appreciate y'all
Well,
here.
we have one more question from a latecomer here.
I figured that would be the case,
Mr.
sir.
Ridley.
To my friend. So you said that these are bonds that's done, and the taxpayers are not at risk. But if the market does go down, who has to pay back those bonds? The taxpayers.
The GHFA,
Who
the Georgia
funds the
Housing Finance
Who
Authority.
funds that?
They're self-funded.
It's secured by the real estate asset and insured by FHA. So this is not the full faith and credit of the state and taxpayer funds. It is secured by the real estate asset, the mortgage security, and then insured.
But who funds that part in the federal part?
The mortgage insurance?
No, is it the insurance company or the FHA that's?
FHA, it's FHA insured.
Oh, okay.
The physical real estate asset is the security.
Okay.
Yeah.
So, but if it falls in value, just like in the banking industry, if it falls in value because we have another 07, 08 or something like that, then you're negative, then who has to make up the difference? Because the bonds are out there to those investors, and now that's not worth as much as it was, so who comes up with the extra capital to pay off those bonds?
Well, that's what we talked about, I'd mentioned in the very beginning. 98% of these loans that they do are insured by either FHA, VA, or USDA, so they're federally insured. So if you do have that and they do have to foreclose, and I think they said you did 12 foreclosures last year out of a portfolio of about 14,000 loans.
That's
so
right.
0.06%. If they do, and if those assets are underwater, then that difference would be made up by FHA, VA, or USDA, whoever the insurer is. And they have that in place before they issue the loan. When the loan is issued, it's insured before the loan's done.
I was in banking from 2000 to 2012, so I understand completely when it's good and when it's not.
Kind of makes your stomach churn when you think about it, don't it?
I was building houses. I understand it completely. We thank the presenters and everyone who came, and we will get with you and let you know, Representative Crowe, when we're going to, Chairman Crowe, we're going to let you know when we're going to talk to you again.
All right. Thank you all very much. Appreciate it.
I didn't get called down one time, believe it. We didn't do anything for them.
Thank you. Carrying around my time.
Absolutely. Hey, appreciate it. All right. Oh, I know. Don't worry about that. Well, they good, okay? No, Jason. All right. Well, yeah, but I mean.
Sorry, this is a really minor
I'm used to getting the each added on.
I know.
Yeah. Yeah, I appreciate you. My brother's still working.